I, 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 He got fired from Kane, now we ain't got no shame. So we started a pod, Chuck Yates needs a job.
Hey everybody, welcome to Chuck Yates Needs a Job, the podcast. Pretty cool stuff today. Trying to corner the market on former UBS bankers as guests, so I have as my guest today, Brad Olsen. Brad, welcome in.
Thanks for having me, Chuck. I'm excited.
All right, I'm going to get you to tell your background and all this, but we got to jump to the chase on this. Dude, are you Mr. Skilling? Seriously. You have to be. A non-lives matter at the Chuck Yates Yates Needs a Job podcast, so we can like black you out, put a smiley face over, distort your voice.
You know, my business partners, friends, colleagues, I've been accused of being skilling by dozens of people, and I know I'll disappoint some people listening I'm not skilling. And, you know, I get a lot of grief because people just assume that I'm willing to lie. I'm willing to go to the mat for this thing. But, you know, as we'll talk about in a second, skilling really took off as I was, you know, bootstrapping a new company with my partner. And, you know, my partner heard it from a friend, and he came into my office one day and said, dude, if you are waging Twitter war on the entire industry as we are trying to get our cash flow above cost, that's not cool. And I looked at him, I said, you know, Mark, listen, I've got 4 kids at home. They're 4 kids in a 36-month range. So,
you know, we could tell you what's causing that, by the way, if that'll help.
Yeah. You know, just seems like, you know, the stork visited us a handful of times in a few years. We had twins for our 3rd kid. And so I was in my catcher's stance doing bath time every single night, and people were texting me like, dude, this 64 team tournament is hilarious. And I'm sitting there making less money than frankly I ever had, starting a new company, getting beat up by 4 kids and yelled at by my wife. And the idea that I had anything left to make a, you know, full-time job out of tweeting seemed crazy. But, you know, obviously you're not the first one to accuse me of it. So I'll give you the official answer.
Okay. So here's what I did. When you agreed, whatever it was, 5 days ago to come on the podcast, and I don't think I'm violating the sanctity of the DM because, you know, what happens in DMs stays in DMs, but I'll violate it here. I DM'd Mr. Skilling and said, hey, see you on Thursday. And I got nothing. Nothing. So anyway, last night I DM'd Mr. Skilling and I said, hey, you didn't respond to this. Okay. I think you're thinking that if I think it's you, you're going to sit there and say, hey, what do you mean Thursday? What are you talking about? But then you figured out that I would think that was what you were thinking to do it, to cover it up. So you said nothing. I see what you're doing. I got a DM back this morning that said, nah, I just figured you DM the wrong person. By the way, who the hell is your guest this morning? I'm intrigued. So you're playing this well. You're covering it up.
No, thanks. I mean, the funny thing is I've heard about public company board meetings where skilling and my identity as skilling was discussed for, you know, a significant chunk of the board meeting. And, you know, there are times when I hear these stories, I'm like, you can't, you know, being surrounded by, again, like a household with 4 kids running around. My oldest is now in 2nd grade. I just joke with people that I'm not that funny anymore. I've got too much childcare.
Thou who protests this much, I'm starting to think this is real. Because if anybody's going to suborn skilling, Maynard Holt, Dan Pickering, and they're not going to tell Tudor about it, right?
Yeah, no, look, I mean, it's I wouldn't be surprised if whoever the real skilling is shares some of that, you know, Houston energy finance DNA, but I'm not into golf. And Skilling talked about wear patterns. I had to Google what a wear pattern was when I read Skilling tweet about great wear pattern. I didn't even know what that was. And so I kind of thought to myself, any close friend of mine, and I know we're meeting for the first time, but any close friend who's accused me, I've kind of said like, there's too much talk of golden retrievers and golf on that thread for it to be me.
Okay. Fair enough. We'll go one more thing in EFT though. Who's Kenny Lay? Any ideas?
I honestly, Kenny Lay is one that, being a lurker, I'm not, I follow Raising the Bar. Raising the Bar is probably the closest I have to like somebody who, like I'm following almost every tweet that they put out just because, as a public market equity guy, I love somebody who's focused on public equities all the time. Kenny Lay is more about having a good time. And as I, already said, I have 4 young kids. I'm not into having that much of a good time anymore.
I've given up fun for 18 years. No, I think Kenny Lay is Sankey. Paul Sankey. Although, it was interesting. I went to a party that Sankey threw over July 4th, and he was up on stage talking, and I was DMing with Kenny Lay. So I'm not sure it's Lay.
You got to have body doubles to be in the Anon game.
I guess so. No, I'm just kidding, Paul. The last rumor we'll do on that is, there's been bouncing around that Colin McClellan is actually Kenny Lay. And one, I don't know. I don't think Colin would fess up to me. But the one theory I have on why Colin is not Kenny Lay is because Colin's ego is so freaking big. He'd tell everybody.
Once it gets cool, I don't know how you could stay Anon. And I'm
freaking Kenny Lay. I can see that.
Once you get over 10,000 followers, you want everyone to know who you are.
Exactly. I aspire to that one day. All right. So you grew up in New Jersey. How do we get from New Jersey to Rice University in Houston?
Yeah, it's a great question. I mean, I'd always been a curious kid, I guess is the best way to put it. Never traveled to the South.
Is that like code for geek? I was a geek too.
Yeah.
We've got, if you go to Rice, we're nerds.
Yeah. Anybody who ends up at Rice, and I ended up at Rice totally, a very nerdy way, but a totally random way. Grew up in New Jersey. My parents were both from the Midwest. They are both from the Midwest. And so never really got inundated in that, kind of like Wall Street lacrosse player, 8 generations of New Jerseyan kind of culture that, I feel like I grew up in. And so I always kind of thought college would be a great free option to go try out a part of the country you've never been to before. And so I had never stepped foot in Texas. And I went to, speaking of nerdy, I went to a model Congress where you go to DC with a bunch of kids from around the country and you pass a fake bill. So, you talk about cool ways to, meet girls in high school. I passed a bill this last weekend, no big deal. But, I ended up caucusing.
Worked for congressmen for years, man. Yeah. So, hey,
I left before those perks, But I ended up caucusing with a bunch of guys from Texas and, was talking to them and was like, growing up in the Northeast, it is an intensely competitive, great school systems, public schools, a lot of competition to go to one of those like Ivy League Northeast schools, which I always kind of found nauseating. Like the idea of a bunch of kids going to the same schools as everybody they grew up with, and crying or not showing up at school for a week because they didn't get into Georgetown or Duke or whatever. And so I thought, maybe applying to school in the South would be just a kind of cool way to zig when everyone else zags. And my issue was I didn't know the name of any schools in Texas. So, I basically came home, told my parents in between 2-a-days for football, let's go to Vanderbilt, let's go to Rice. Vanderbilt's dorms were worse, and I spent 3 hours on campus, knew nothing about the school, applied, got in, and, have now been in Houston for 20 years.
Oh, that's crazy. The Rice story I love is George Will decides that his kid needs to get into a good college, and supposedly, let's be delicate about this, may not be up to standards to get into an Ivy League school. So he writes this wonderful article about Rice, and he says, is Harvard the Rice of the Northeast? Or, something, this quote, and we all use this. Rice doesn't let his kid in. it's like, come on,
It feels like Rice is the kind of school that would take something like that and use it as an opportunity to dunk on George Will as opposed to
Exactly.
letting his kid in.
Exactly.
But look, I mean, coming down to Texas, I've always been a big believer throughout my life that the world doesn't need a 20th or a 30th X. Name your thing. Like the world doesn't need another one of those. And so when I heard that hardly anybody from the Northeast, Rice back then, enrollment was like 25% Houston area and 50% Texas. And I thought Duke is going to get 5,000 kind of yuppie kids from New Jersey applying for their freshman class. Rice isn't going to get that. And so, I was probably trying to play the George Will game a little bit myself, which is, you're going to stand out
as the quota. I'm the New Jersey quota. I'm
the 2 New Jersey acceptances a year. And, now we're filled and we're good.
So what college are you in when you get to Rice?
Hanson.
You're in Hanson. So for the listeners that don't know, Rice has a residential college system and no fraternities on campus, because I'm thoroughly convinced Edgar Odell Lovett, the first president of Rice, got his ass kicked at a fraternity party or something. So that's been banned. So your college actually kind of functions as a fraternity. It's just you're put there by random.
Totally. Well, actually, in my case, this is kind of it's a funny story that we haven't talked about, but when they select you, they hand select you. So while, all my friends are going to big schools and basically getting thrown into a 10,000 person freshman class, at Rice, they sort you to a college and then they select your roommate based on a roommate questionnaire that you fill out, and a student reviews the questionnaire. And so, we had all crammed for SATs, learned all the vocabulary words that, you'll forget a few minutes after you learn them. And there was a question on there that said, if you could spend time with any historical figure in a romantic or torrid relationship, who would it be and why? And so, having done my SATs, one of the things they teach you is or means something different than the first word. And so I thought, well, romantic or torrid just must mean the opposite of romantic. And I wrote in my roommate questionnaire, I said, I'm a kid from New Jersey, played football, love going to parties, but I'm also a nerd and I'm into school. And if I could have a torrid relationship with anyone, I think like traveling around Europe with Napoleon as he takes over all of Europe would be.
And we've always wondered who purchased Napoleon's testicle off of eBay, right?
So I arrive at Rice, and the students who are in charge of sorting, the people who organize orientation week are students.
Right.
And, one of the guys came up to me and said, hey, man, I just need to meet you in person. I was like, well, great. Like, I'm thrilled. I'm from New Jersey and like, I'm excited to be here at college. It's like, so you like parties. Like there are a lot of kids here at Rice that won't party and won't drink a beer by the time they graduate. So it's weird to have somebody say, I'm a nerd, but I like partying. I played football, but I'd also like to have a torrid relationship with Napoleon. And I was like, honestly, I just didn't know what it meant. And he said, well, we're actually hedging our bets, and we've got a Rice baseball player in the quad with you, in the 4-man dorm with you. And then we've got, this Archie from a architecture major from a very sheltered family in Kansas who's, his application kind of jived more with the Napoleon thing. And, so I ended up having a great time. I made friends with everybody, but, it was just kind of funny because I had the, Rice baseball player who's in the process of winning the national championship my freshman year. And then on the other side, I've kind of got the Archie who's up all night, studying architecture, partying. And so, I always tell people like, not being afraid of kind of making a fool of yourself or admitting that you don't know what something has probably gotten me a lot of my career so far. And that's how I got my roommates at Rice.
That's how you got on the podcast.
There you go. There you go.
So I will say this about Rice. I mean, you and I have competed at the highest levels in business, right? I mean, doing money stuff throughout our careers and all. I will say this, the amount of intelligence at Rice while I was there, 3x, 5x of what I dealt with in the rest of the world. Would you agree, disagree?
It's really interesting. I mean, not to ignite emotions about Rice on that wasn't my intention coming on the podcast, but my wife, who didn't go to Rice, we grew up together from 1st to 12th grade. My wife and I went to school. We basically took 4 years off. She went to school in DC. I went to school at Rice, but she would come visit me. And, we ended up getting married after school and, having 4 kids. But she would always kind of say that weirdly, the high school cohort that we hung with, smart, educated overall, but public high school had more of the kind of intangible things that you encounter more in the business world, whereas the Rice kids were all just astronomically smart, but would have a panic attack when it was a resume drop for the consulting job, and I remember
smartest guys, one of the smartest guys I know at Rice is a postal clerk these days. And it just couldn't function in the real world. But God, if you needed a problem solved, he was your guy.
Well, yeah, I mean, I studied abroad for a semester in Russia. And when I came back, I got randomly assorted to whoever didn't have a roommate. And so, of course, how good of a sales pitch is that? There's one guy who couldn't find anyone to live with him. And so, hey, and he was an electrical engineer, and, an electrical engineer at Rice is, an interesting guy, no matter what walk of life.
That's hardcore geek.
And we were going to some, internship job fair, and I was like, hey, I'll walk with you. I'll walk over there. And, I'm wearing my dweeby Joseph Banks box shaped suit. And he walks out and he's wearing jeans and a Texas Instruments t-shirt. I was like, well, yeah, I know you're trying to be kind of punk rock, computer science here, but don't wear a t-shirt to the job fair. And he said, dude, I'm going to talk to Texas Instruments. I'm going to have a drop on all these guys who are wearing business casual. And I thought, like, that is a classic Rice job fair.
Such a Rice deal. No, it really was an amazing place. One last Rice thing, and then I want to hear about the first job, but and maybe it actually even ties to the first job. So you were roughly there when the Fab Five was at Michigan, right?
Yeah. No, it was.
What year was the Fab Five at Michigan?
So we were just.
By the way, my kid's new favorite line is, "Oh, don't worry, Dad, I'll Google that for you." So yeah.
Well, I left my phone over there, but yeah. So Fab Five was like late '90s or early 2000s, maybe like just 2000, and so I matriculated like 2002. So
who was the Fab Five's first game?
You gonna tell me it's Rice?
Rice University.
There we go.
At the Summit.
Okay.
At Olstein's church. And Rice actually played them tough because that was the team that had Adam Peaks on it.
Okay.
Brent Scott. I forget who else was there. I think Chad Michael was probably already gone. But anyway, played them tough. 75-71. I think Peaks had a three-pointer to either tie it up or win it and missed it kind of at the end, and then we fouled them, and they did that. More importantly than Rice losing to the Fab Five for their first game, what happened at halftime? Given that you didn't know it, I'll just I wanted to say, let me speak there, and you're going to say, well, Chuck, that's all you've been doing is speaking. But sometimes I'm so entranced with what I'm saying. It's more like a listening experience. But anyway, no, so halftime, they give you 35 seconds and you take as many shots as you want. You got to hit a three-pointer, and then you got to go back to where the Rockets logo was. And it was kind of, let's call it halfway between the three-point line and the mid-court line.
Okay.
35 seconds. You got to hit one of each. So the guy in front so I get drawn. There are two people doing it. Guy in front of me walks up, cans the three-pointer, and then steps back to that logo and cans it. I mean, 2 shots. Boom, boom, boom. Free Southwest ticket. So anyway, then it's my turn. And I fancy myself a decent basketball player. Yeah. So I go out there. The basket hangs in the middle of nowhere. You know, when you play in a gym, there's a wall behind it. So you have some depth perception. And you have a wood backboard, certainly not a clear one.
Yeah.
I mean, this thing is hanging in the middle of, Summit because there are fans everywhere, right? And it's a clear backboard. No depth perception to save my life. I'm sitting there at the three-point line, 8 straight air balls, and I'm missing by 2 feet. It's
same hoop as the guy who canned the 2 in a row.
Oh, yeah, right after that. The whole, and the crowd's all Rice people that all, know me and stuff. So air ball. But on the 9th shot, I can the 3-pointer. I have 2 seconds left. And, they got a guy catching the ball for you, throwing it out. So the guy kind of throws the ball out. I grab it, step on that logo, hoist it, canned it. I got my free Southwest.
Nice.
There we go. We'll make sure we edit that out, because maybe we'll save that. Hey, how was the podcast with Brad? Well, it was great. I told my stories, and I think he was there. But
Yeah, I was there for some of it.
yeah, whatever. All right, so you graduate from Rice. What are you gonna do?
So interview with Credit Suisse, Morgan Stanley. And it's funny, right? Because I was a political science, philosophy, and Slavic studies major at Rice. So all the job skills.
Right.
And, my roommate, who actually now works for a Kane portfolio company, so he'll remain nameless. He kind of said, hey, I know you're probably thinking law school, but I just freaked out. I don't want to be a doctor. I don't want to be pre-med anymore. And I interviewed, and these investment banking places will give you a shot if you just kind of say, I'm a smart guy who's just, hasn't found his passion yet or whatever. And so I was like, oh, that sounds great. Like I'd much rather get paid than pay for law school. Interview at a couple of these investment banks, Credit Suisse, clammy, shaky, and
So who's at Credit Suisse at that time? Because that, the whole Houston investment banking, it was always the energy office, right?
Yeah.
And Credit Suisse would send a team down here, and then another bank would steal it.
Yeah.
And then Credit Suisse would send another team, and another bank would steal it.
Yeah, it's like Apocalypse Now. They just keep going upriver and going native.
Yeah, exactly. Morgan Stanley needs an office. Boom. Let's take Credit Suisse.
Yeah,
any idea who was there? Do you remember?
I want to say it was an associate named maybe Mark.
Okay.
And so long.
Did he give you a job?
No.
Oh, screw Mark then.
Yeah. No.
Let's go somewhere better.
But it was funny because, I think every time I went into an interview, typical Rice guy, I think when you're around super smart people, there's a lot of subtle flexing, and there's a lot of engineers saying like, philosophy, good luck, and you're just kind of like, oh man, the engineer knew what job he was going to get freshman year. And I'm here with a philosophy degree, kind of out in the wind. And, ultimately you get practiced, and you kind of, ultimately to me, it was Deutsche Bank and UBS. And the Deutsche Bank guys seemed kind of fun, kind of freewheeling. And the UBS guys were just total, everyone was grumpy. Nobody had time to listen to your answers in the interview. So, of course, when I got both job offers, I went with UBS because they must be cool, right? They must be cool. These guys, they seem so irritated to have a super day that they must do a lot of deals. And, and so, of course, UBS wasn't even dominant in the league table. I mean, at the time, Steve Trauber, the head of our group, and Steve now runs Citi. But at the time, I mean, our league tables always showed us as number one, but we weren't, we weren't Lehman Brothers. We weren't like a dominant JP Morgan Lehman Brothers franchise. But when I look around, the bullpen I was in, all of those guys, I mean, I joke with people that I know, I don't know enough about basketball to talk in depth about it, but we were kind of like the Fab Five, maybe except for me. But, the other guys I was with, I mean.
It was funny. You sent me an email and you called it the Fab Four of Michigan. Yeah. And I was going, only a Rice geek.
Yeah, Rice guy, totally misquoting sports knowledge. But yeah, it was.
So who's in the bullpen with you?
So Chris Transier, who was on the podcast, Daniel Goodman, who now runs Carnelian, was in the bullpen, and Michael Ure, who now is CEO of Western Gas, and I hope I don't get hate mail from all these guys for mentioning their names, but Jordan Marie.
I already texted him and said you were skilling. So don't worry about it.
Yeah, Jordan Marie, Gary Reeves. I mean, just a ton of guys came out of that shop that have all gone on to do, and all guys that I worked with closely. And it was a total grind. And I went from, hey guys, what's EBITDA? And that was my philosophy background. And I saw just eyes roll why do we keep hiring Rice people? Why do Trauber and Sten make us hire these Rice guys who come in and say do I pronounce every letter or is it EBITDA,
And then when you hit EBITDAX, it just blows your mind, right? Oh my God, what's the X for?
Yeah, there's the Rice guys giggling about EBITDAR again. Nobody told him what it actually means. He thinks it's just kind of a funny way to say it, So Look, UBS was a great.
But this is a great testament to you because Trauber never hired me. I interviewed with Trauber every 2 years for like 10 straight years. Yeah, I never got a job from Trauber.
Look, I mean, it was a great learning experience. There was a lot of, I think the friendships you make with guys at 3 a.m. I joke with folks now that like we were all in our 20s and we were pegging. FactSet would give out stress balls, and we would peg each other with, FactSet balls. And, I remember a couple different guys would just earhole you with these FactSet balls when you'd be carrying a bunch of prospectuses, 500 pages off the printer. And one time, I just got earholed with this FactSet stress ball. The pages went everywhere. And, I had one of those moments where like I was holding back tears because you're already underslept. Oh, yeah. You're underslept. You're stressed all the time. You're just like telling your girlfriend, like, I think I'll be out by midnight. I think I'll be out by 2 a.m. Oh, wait, you're not awake anymore. And, somebody just like, oh, man, I killed you with that FactSet ball. And, we still joke today that like, you're in the last professional setting where like somebody will get balled out by a vice president or an associate. And like, it's like football practice where you're like, dude, I think Tim's crying, like there was a Canadian guy I worked with who's now, a VP of, at Halliburton. And, I remember I got balled out and I was sitting there in silence and he was in the hotel desk across the wall from me. And he heard the keyboard clicking stop. And he's like, hey man, UBS wouldn't let me meet my movers once. And I just had one of those moments where I was like, I need to see the movers. And my MD was like, dude, that's great. This book needs to get done. And he's like, and I just started crying. And he's like, he's like, I know you're in a place right now where my advice to you, because you're unable to type on the keyboard and you're not making any noise. He's like, just hit the men's room, grab a stall. It's midnight. No one's going to be in there. Get a good cry in, come right back and bang out more work. And I still joke with people that I'm like, it's a good story to tell now, but like there were, legitimate, like tough guys who were like, yeah, I want this job because it's the hardest job and it's, the hardest thing to interview for. And like a year later, they're like, I just get so frustrated sometimes.
So my story on that front, because I went to work for Stevens. I went undergrad, detour through UT Law School, Rice MBA. And after the MBA, I went to work for Stevens. And my boss was Gene Shepard, he's now CEO of Brigham. And anyway, I remember, and I love Gene to death. I mean, just not a better person on this planet, but Gene is the most detailed person, I've ever met. And so trying to do a book for Gene that was okay was really tough, right? So I had stayed up all night doing this book, and Gene had just picked it apart and wanted me to stay the next night and do it. And at 3 a.m, I wrote this diatribe because this is back almost before email, So there was no electronic communication. So I wrote Gene this note about, I'm not worthy of this job. I can't do it, blah, 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 blah. Woke up came in the next morning, and Gene's like, do we need to talk about this? And I said, no, I hope we don't. She just tore it up, threw it away. But that was my cry. Yeah, there were probably tears all over that letter.
And we all have those moments. I got somebody went to a London roadshow and said, I want to pitch Citgo. So pitch a state-controlled Venezuelan entity on divesting all their remaining U.S. assets. They don't give any public info. Go dig Google, look for interviews with Citgo employees, find anything you can and make, basically a 100-page asset book on Citgo. And the associate had just, the associate above me had just, he was an ex-military guy, he had just come out of MBA, and he was like, dude, I heard if we play our cards right, like you can make $1 million in this job. And I was like, a week from now, you're going to forget about whatever the upside case was. And you're just, and so he was like, how do we do a Citgo book? And I was like, look, man, like you're new. I've been doing this for a year. I can probably bang out most of this Citgo. But I had one of those moments where I sent him an email. I was like, just get out of my way. Let me do the Citgo book. We just got handed a total, unappealing task. I used some very unpleasant word for the unappealing task by a guy who's going to London and who doesn't give a crap. And, wasn't crap, obviously. But, and I don't believe in hypnotism. I don't believe in out-of-body experiences. But the associate came over to my desk looking at me like I had just, run naked through the bullpen. And he was like, dude, I know you're frustrated, but that email, I was like, you and I are friends. Like, we're working together on He's like, I know. I was like, so why would sending you the email be so bad? He's like, well, because you CC'd the MD. And I was like, no, I wouldn't. I no way. The MD just walks over and hit similar deals like, we gonna talk about this again? I was like, nope, we never will. Complete mistake. Frustration has now left my body. I'm good. I will be working on Sitgo, piecing together Google searches for the next week. And when you come back, and sure enough, he came back like disappointing, undercooked, whatever.
Right.
Like, I'm glad we're back on good terms that you can dunk on my book.
I dug in. There was a merger that went through one time, and it was a private company, but had public debt. But the reporting requirements for the public debt wasn't as robust as being public equity and all this. And I literally spent 5 straight days building this model, piecing together all this stuff. And I remember the only time I ever made Gene laugh, Gene comes into my office. Well, where's this analysis? We're going to go pitch this. And I go, Gene, if I'm doing all this, I guarantee you the public market hasn't done all this to figure out these multiples. They just haven't, Gene, because I'm pretty smart. And Gene normally would have yelled at me at that point, but Gene just looked at me and busted out laughing. He's like, all right, fair enough. Slap a 4 times EBITDA on it. We rolled into the meeting. So you come in, you're doing energy, and then where does that take you?
So, I think I had a moment, not a moment, but we were working on a deal, and we were working on a deal with like an old school Burlington XTO management team, guy probably 70, 75. And the bankers were sending over this IPO deck that the bankers put together with all of your compliance and all of your disclosures. And, the chairman CEO of this company would basically send back a PowerPoint with none of the corporate formatting, none of the UBS and Lehman logos in the corner. They were just screenshots he had taken of Bloomberg about things he thought were interesting. And the bankers are like, oh, you can't do this. There has to be, you can't just pull a price chart of a stock and say like, we're kind of like that, and like IPO docs, like, you see Exxon, it's up a lot in the last 30 years. I think we're kind of like Exxon, and so the MDs basically got to a point on this deal where they were like, we're going to cram a compliance approved presentation down the chairman's throat. He was born and raised in Odessa, and he is going to take none too kindly to that. Brad, you're 23, 24, you're going to be the only banker on the roadshow. And I looked at them. If it sounds silly to anyone listening, like to send a 24-year-old as the corporate, representative for an investment bank.
You still look young today too. So I'm not sure at 24.
24-year-old, I was still wearing the boxy Joseph Banks, right. Mr. Roboto suit. And, I go on this roadshow. I've been on enough. It's a bull market. I've been on enough IPO roadshows that I'm calling multiple hedge funds ahead of time, like, be ready, be 10 minutes early. We're going to be there 10 minutes early. There's a transit strike. I've called like 8 limos to follow us. And these guys, they're so appreciative. And they're like, so your boss is chickened out, sent you, and you're just on the phone and like, cars are coming and going. We're making every meeting on time. And so they kind of included me in their little circle. And, the company is long since, it got sold and is no longer a public company. But, the CEO and the chairman kind of were in the car joking, the limo. And he's like, man, turns out our CFO was just a friend and he didn't know how to do the accounting. So we promoted our assistant treasurer to treasurer and then to CFO in 1 week. And, and I just remember I'm sitting there like I'm part of the gang, and we're driving around and I'm thinking, this is great. Of course, the guy who ended up having a private equity kind of like multi 9-figure $1 like personal windfall was the assistant treasurer who got promoted like nice. For the roadshow. But, that was kind of one of those things where I remember flying around and on the company plane, and one of the executives just goes, hey, I want to go to the OSU game this weekend. And, the plane just starts going, and I thought to myself, as the plane descended, Miller Lite cans came off every ledge inside this plane because we had run out of cup holders a long time ago. And about 100 empties just banged against the pilot's door. And the pilot's like, everything okay? And I remember as I got back to UBS the following Monday, you could tell that like my bosses were happy that the road show went well, but there was a little bit like, this guy thinks he's pretty cool now. And I got staffed on some horrible project. And one of the hedge funds that we had been talking to in Los Angeles on the IPO roadshow, I basically sent him an email at like 2 a.m. and I said, I'm getting grinded into dust, and you guys were in shorts in Santa Monica. Could I be your analyst? I know what EBITDA is now. And, these guys in LA probably didn't know what to make of it. And they were like, yeah, all we do is energy, MLPs, pipelines, E&Ps, whatever. You're from Houston. I'm like, well, I'm actually from New Jersey, but you're from Houston, close enough. Why don't you come out, interview for a day, and you can be an analyst? And so that's how I made it.
Who was that? Can you disclose?
Yeah. So the name of the firm was Strom Investment Management, and
because Strom came out of Kane, didn't he?
Yeah.
Yeah. Okay.
So like the bars of Santa Monica are littered with ex-Strom traders who are just like there at like 1:30 p.m. like, oh, Strom, huh? See how long that lasts. And you're just like, hi, I'm the new guy.
Oops, I was really fired up about this.
Yeah, exactly. Because of course, like the hedge fund world, all of my buddies who have all gone on to do, really cool things, they were all kind of like, hey, you know how we come to work in a tie every day and get berated by other guys in ties? Well, you can get berated slightly less for a few hours less per day if you go to a private equity firm, but you still got to wear the tie. And I remember thinking like, wait, what? Like that's the off ramp? And I was like, there are these guys in LA who leave work at 1 p.m.
Right, market closes.
Market closes, you're stressed, like go to one of those bars in Santa Monica. And so, I went out there, I took a very, similar like New Jersey guy going to Texas. I went to a hedge fund in LA, sight unseen, had never been to LA before other than those IPO roadshows, convinced my now wife to get her company to transfer her and to move us out to LA. As you'll hear the end of this story, she was pretty fed up with me by the end of our LA experience because I jerked her out to the West Coast. But it was cool. The reality was, it was a $200 million hedge fund. Strom had, spun out of Kane. He's, classic kind of iconoclastic, just misanthropic guy who just was kind of like, look, I gave Kane everything, every investment idea that they have that's worth anything was on my desk in pencil in 1989 or whenever I walked out of there. And he kind of rode the nascent hedge fund boom in the 90s.
That's not what I left on my desk when I walked out of there, but better part of discretion keeps me from saying such things. Sorry, go ahead.
No, and so, Strom was this he was an interesting guy because his kind of claim to fame, or at least one of his claims to fame, he had created like a multi-strat, like a pod shop. He had created like a mini Citadel with the money that he managed. He would say, hey, it's 1995. You think you know how the world works. Here's 10 million bucks. Whip it around. You double it, I'll give you another 10. You lose 10% of it, I'll take 9 million bucks back. And he created like a multi-strat hedge fund. One of the strategies was kind of energy and midstream MLPs, you name it. And he kind of started digging in the early 2000s, and he found, what is now Mr. Skilling obviously has made a career out of writing about the incentive structures of midstream companies. And he basically did the math and was like, so your management fee goes up every time you issue more shares? Like, that can't be right. And if the deal's accretive, you get an exponential growth of the common share accretion. Like, no way. And
no, we put a great title on it. It's called Incentive Distribution Rights.
Yeah. Speaking of,
when somebody figured that out, and it's like, no, let's just call them IDRs. Yeah.
So by the end of the MLP boom, when I was on that road show, there was something, I forget what the exact name was, but it was like management incentive rights, like MIRs. And I remember, this is a little bit of a discursion, but on that road show at UBS, we're in a deep dish pizzeria right near Midway Airport. And, we're one of the Lehman Brothers bankers who's like tagged along is like, is there Chardonnay, on the menu? And, the management team is like, pitchers of Miller Lite, like we're about to print a $300 million IPO, and like we're annoying everybody at tables around us. And one of the management guys I remember stood up and he said, I don't know why they call them MIRs. They should call them MIBs for money in the bank. And, standing in like a South Side working class, like deep dish pizzeria wearing suits, waiting for them to gas up, the company plane and just like, sloshing these Miller Lite pitchers. I remember thinking like, this is definitely the peak of my investment banking experience.
Why do they hate us?
Yeah.
I can't figure it out.
Yeah, look, I mean, at the end of the day, it was an exciting time in a bull market, but we can, we'll talk about it in a minute. Like bull markets, bear markets have their own behavioral attributes. The same way that today it's a bear market, everything we do is wrong, nobody will invest in our sector. Like that's as natural of a part of the kind of bear market grieving process as the clanking the Miller Lite pitchers together is in the bull market, right? And there's nothing you can really do to change that. But, so anyway, back to Los Angeles, the reason that out of all the strategies, the fund decided to stick with midstream, there was a private buyout of Plains All American out of Plains Exploration or
Plains Resources.
Corporation.
Plains Resources Corporation.
Right. And, Strom, who
Hold on 1 second. You keep talking. I'm over here reading my separation agreement from Kane and the disparagement clauses just to make sure, and the confidentiality clauses to see what I can say during this conversation. So if I just nod at you sometimes, just keep rolling.
Okay.
Right.
Yeah. So, the reason that midstream, obviously at the time you had Matthew Simmons talking about the world's running out of energy.
Twilight in the desert.
We're trillions of dollars underinvested, which is again, classic bull market behavior. No amount of investment is enough. The same way that with renewables today, 1,000% growth year over year, not enough, and it was a very similar mentality in 07, 08 with the discussion around investment. And so here was Plains, an infrastructure business effectively getting bought out in a private deal by a private consortium, including management. So at the time, this is before I arrived at Strom and I heard all this story post, but Strom basically called up Leucadia, the financial conglomerate that now owns Jefferies and other businesses, and said, hey, like, if I'm right, this business is going to get bought out and it's going to do a acquisition that is going to effectively double the management fees. So they're going to buy it out for 10x cash flow. It's going to be a 5x deal within the year. And if the deal is accretive, it's going to end up being a 3 times cash flow deal.
Oh, by the way, if it's public, it trades at 15. But keep going.
Exactly. So clearly, what we would call,
hypothetically speaking,
asymmetric situation. And so his kind of, my old boss kind of said, hey, I'm coming with Leucadia. I want what every insider management buyout hates the most. I want all the books open. I want your bid to compete with my Leucadia cash bid. And I want us to duke it out in the daylight. And of course, the management and Vulcan group kind of said, would you like to participate personally for 4% of our buyout? I don't obviously know that that's how it all went down, but long story short, Strom ends up owning 4% of this GP personally. The deal that I described, taking it to a 3 times multiple, is a tip of the iceberg. Over the next 5 years, cash flow to the GP, increases 10-fold, 20-fold, and the multiples get bigger over that period of time. So when I arrived in late 2007, he had split the ownership and basically put some of the private ownership in our fund. And he said, hey, 10% of our fund is private, and we mark it at a, valuation mark to model. And every quarter, it is so far below market that we can basically mark it up in anticipation of this IPO. The IPO should go down in 2008. Famous last words, right? And nothing bad will happen in 2008. Valuations will be great, and we'll finally liquidate this 4% position, which should be worth 9 figures, maybe multiple. And so I was there in 2008 as, what's the IPO update? What's the IPO update? And, we all know whatever you learned in business, you originally learned in high school, in the high school cafeteria when
Right.
like Megan's not passing notes back,
Yeah.
and, like, what's the update? Lehman, what's the update on the IPO? Obviously financial conditions today are unprecedented. Like, the market's still trading pretty well for energy assets. What's the story? And we're out there, in LA living, holding 4%, feeling very minority, powerless, whatever. And, at some point, hey, great news. The mark that we are getting from Occidental buying out a stake of the GP makes your 4% look like a lot. And, of course, my boss was like, don't care. Where's my cash? And the response was, well, you should be really happy because with Lehman Brothers, the bank or the book runner on the IPO potentially not existing in a month, we're still able to get you a mark that shows it's worth 15 times current cash flow. And my boss, he was an extremely technical trader. I mean, he was I don't like, something opens in the morning with a gap down, he'd be out of it by 10 a.m. He would be long something for months, for years, if he didn't like the way it was trading.
And that was very much Rick Kane. I mean, Rick Kane started off life as a bond arbitrage guy at Cantor Fitzgerald. So Rick very much a trader type. So not surprised they were drawn together.
Yeah, I mean, my interview, this is probably a very atypical interview, but, Mark Strom spent 5 minutes with me and he said, how much is an iPod, which was the cool thing at the time. And, I was like, I don't know, 300 for the small one, 400 for the extra carrying capacity. And he said, hey, I'd like to sell you my iPod for $200 as is, no returns. And I was like, figuring this is a thought experiment. Like, right. No, that's all right. I'll pay 300 at the Apple store. And he's like, you're hired. Because anybody who realizes that once the bloom is off the rose and people are trading hands for less and less, you can't go back to charging $300 to $400 for an, like, people will not pay for an inferior good. And the market shows you when a good is inferior by gapping down. I'm still new to the EBITDA concept. So right. He's explaining this and I'm like, so I got the job, like I can do Excel spreadsheets. And he was like, I don't care about any of that stuff. Learn what a double top is. And, so as I got through the kind of insanity of a technical trader who you've got to remember, the world's going into meltdown and energy prices are going like this.
Yeah.
And a technical trader loves that kind of strength in uncertain times. And so he is basically yelling in one ear, do you have the Plains IPO model? Do you have the Plains monetization IPO model ready to go? And in the other ear, he's like, Chesapeake is Saudi Arabia, but it's privately, it's available to buy for anybody. This is the chance of a lifetime. We're basically buying into Aramco before they found Gawar. And I'm thinking like, whoa, this is getting, very trend theme, no EBITDA multiples, just this is worth a lot more than it currently trades at. And I'm doing my model, trying to catch up with all of his Chesapeake buying. And, the morning they do the Haynesville JV, the stock gaps down on what is every, financial note says best deal ever. Chesapeake is now worth triple what we thought it was.
Right.
And Strom's, we're totally liquidated out of everything. And I want to get out of this Plains IPO even more now, because even a great Haynesville announcement, the market doesn't like it. And the market doesn't like energy anymore. And I was like, it's still the best performing asset class. You've got to be crazy. But I'm 24. I'm still learning. And so, he's desperate now to sell out of Plains. And he calls, the bankers calls, Plains management. And he says, this Oxy deal will not stand. It was a Houston management buyout that wanted to steal the company when I first got in. And now it's a Houston crew of, different investment firms like, NCAP and Kane were getting liquidity on the Oxy buy-in.
Right.
And, he's like, and of course, like Plains's lawyers were kind of like, Mr. Strom, you don't have any tag-along rights in this transaction. You officially cannot petition to have your, this is a private deal. You're not involved. And he's like, well, in a classic kind of LA guy move, like when I'm running into the courtroom, waving a bunch of papers in the air, like, we'll see if you guys still like it then, and And so, okay, we'll be in touch, and everybody on the plane side was so mad. And, again, Mark Strom, my partner, my boss, he was the kind of guy that, when things were trending up, he wanted to own more. And when things were trending down, he wanted to be out. And so, about a week later, we get a very nice call from Plains management. It's like, guys, we heard your concerns and we have moved heaven and earth to get Occidental to expand their purchase. And they will include your 4% stake in the Occidental GP buy-in. And, Strom, my boss, kind of sat there with a kind of calm quiet that I'm not capable of, but he would just sit for 30 seconds on a phone call and just let other people fidget. And he said, well, I guess Oxy really likes what they have in this Plains GP. Must be really valuable. And everyone's kind of just dead silent. And he says, yeah, I'm cool. I'm actually going to hold on to the 4% then. And I mean, you could have hung up the phone and heard the screams and the epithets from Houston. I mean, and sure enough, right, it ends up IPOing a few years later at an even better valuation. But, I remember just like you couldn't even tell whose voice it was, but no good deed goes unpunished with you, LA, and the rest is, unprintable. But it was one of those moments for a guy who had come up as an investment banker, junior investment banker. And when a CEO's talking, you never talk.
Oh yeah.
And you're sitting there. My boss is wearing, Lululemon or Nike Dry Fit coming back from a hot yoga and just saying, oh, I'm good.
Okay. Well, that's the thing that with some age and some experience that I now really, really appreciate is being that young guy, being in the room, getting to see those CEOs, because this is a related story to the time. Because when you had Plains Resources, it owned the GP of Plains All American. And actually what was going on is research coverage on Plains Resources would sit there and say, okay, the value of the units it owns in Plains All American is X, and the oil and gas reserves are Y, and then it would subtract the total consolidated debt on Plains Resources balance sheet. And we would sit there at Kane and go, but the value of the MLP units already subtracts the debt of the MLP. You're subtracting it twice. And I mean, this was like Goldman Sachs research analysts and stuff. It was not, Jim Bob's, bucket shop investment bank. I mean, sophisticated research guys couldn't get the concept that they were double counting. So that was the stated purpose on splitting it. So when we split it, and Kane and Incap kind of bought with management, and you guys bought the GP interest, we in effect spun. So Plains Resources for a while owned just the GP interest, but we spun the oil and gas assets out into Plains Exploration, and Jim Flores came in and ran that.
Okay.
And so Jim Flores was CEO of Plains Exploration and Plains Resources, but we'd split it all out. So this is my story of being the young guy in the meeting. This is why to this day, I love Jim Flores. Jim Flores calls me up and asks for anything except maybe my kids. And on certain days, he might get my kids. If Jim Flores asks me a favor, the answer is yes, because I am the young guy. I've been at Kane, call it a year. I mean, I'm a managing director, but I'm still 32. And the board of Plains is Incap. So, I think Zorich is in that meeting. Marty Phillips might be in that meeting. Peterson might be in that meeting. And then it's Kane Anderson. So my boss, Bob Sanat, sitting there. And then you've got, John Raymond, who was at that time Flores' kind of right-hand guy and all. And then the board of Plains All American was like an all-star list of old white guys in oil and gas, right? So we're sitting in this board meeting, and Flores is circling the conference room table. And what the deal was Plains Resources was going to potentially buy another GP interest of another MLP.
Gotcha.
It was actually natural gas. Might have been Borders, something. Anyway.
Oh, maybe Boardwalk.
It wasn't Boardwalk, I don't think. Well, Northern Borders.
Oh, okay.
Yeah. And I mean, and so that was on the table, and I think it was splitting from Enron or something, whatever the
Yeah.
case was. And so Plains was looking at buying it, and Flores is walking around the table saying, guys, we should buy it. We've got the premier oil platform. Let's have a natural gas platform. It'll be perfect. And he goes, you got any questions? And I raised my hand. He goes, yeah, Chuck, what do you think? And as I started saying my question, I realized mid-sentence, it was the single stupidest question that's ever been asked in the history of business. So I utter out this ridiculous question, and right at the end of it, Flores goes, Chuck, stop. And I'm just like, my heart sinks. I'm going to get fired from Kane. I realize how stupid it was. He goes, Chuck, I know exactly where you're going. You ask that question. It's going to lead to this question. It's going to lead to this question. And you're right. That question is the whole guts of that. You got there after a 20-minute deal. It took me 3 weeks. Here's ultimately how I got comfortable with that question, Chuck. And here's why I'm good with the deal, blah, 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 blah. And everybody on the board's like, yeah, good question, Chuck. Flores looks at me and he just winks. And I was like, whatever you need.
Yeah.
Just whatever you need.
Yeah, no, I mean, that's huge. But the reality is, I kind of joke that there are benefits of being the philosophy poli-sci guy in those meetings has definitely led me to ask more than my fair share of dumb questions. But you made a great point. I mean, I ended up at TPH doing research because when I was on the buy side, I would call guys because I was genuinely like, hey, I'm a philosophy major. I just learned what EBITDA was. And,
Right.
So how did you get to this? Like, why is your terminal multiple? Because this is like a 7 times terminal multiple business. Yeah, I know. But there must be some like mathematical derivation of that. Like you're
Right.
not just you're saying you can't throw a 7 times multiple on this year, but something magical happens in 5 years. You can definitely use a 7 times multiple then. And guys were like, dude, are you trying to be a wise guy?
Yeah.
And you're like, no, I'm genuinely curious. And, when I ultimately took the research role, it was because how many notes have you said, wait, did they double subtract the debt at JP Morgan, Goldman Sachs, Wells Fargo? Like, I must be the dumb guy who just doesn't understand why you would double subtract it. And so when I went to TPH, it was like, write those questions that bothered you when you were the guy who had to be quiet in a meeting. And I was like, I'm going to start just asking those questions. And the thing that was incredible was at TPH, the number of clients and folks who, not everyone's an energy expert. I, spend all my time in energy, but I still struggle with the concept of who's truly an expert. But, I remember kind of sitting there at TPH and saying, yeah, so why would this be valued this way? And people would just write back saying, makes no sense to me. Like,
Yeah.
have you gotten a good answer? And I'm like, I'm sending this thing out to 12,000 people. The only answers I'm getting are like, good question, man. Good question. So your experience, I mean, I think is pretty universal in that, I look around at the table. I'm like, hey, if you have the commanding body language to know little or nothing and never ask a curious question, and you can cruise through a career without having to be the dumb, curious guy, I have all the respect in the world for that guy. But I think, you come out of Rice and you're kind of there's no way I can just bluff my way through the next 3 decades of energy finance.
Right. No, that's exactly right. And I remember having the moment where the emperor had no clothes. I just remember sitting in there asking a very, very well-regarded CEO some basic questions, kind of pulling the thread and just realizing, holy cow,
Yeah.
doesn't get it,
Well, I mean, look, I made a joke about that deep dish pizza joint with the management team, but there was a great meeting shortly before that where a hedge fund guy came in and said, like, your peers are all using 3-way swaps or 3-way collars and swaps, and you guys are out here, with much lower hedge percentages. And it was the time of Lynn and Brightburn and all these other, E&P MLPs. And I remember, this guy, Odessa born and raised, and, 70 or 75, already very comfortable financially. He just looked at the guy and said, like, if somebody comes in here and puts enough lipstick on a pig that you want to marry that pig, then definitely buy that IPO. but I'm not going to throw a bunch of three-way collars on this business and tell you it's not an oil and gas business. And I remember sitting there as the young guy, like, I think the hedge fund guy got owned, but I'm not sure because everyone's so quiet. But I just remember having those conversations where when you dig in from a position of curiosity, you very quickly find out who's real. And I think, in any bull market, we know it right now it's happening. I'm not like a big anti-green or anti-renewables guy at all, but the type of people that are growing businesses rapidly in the renewable and clean tech space are very reminiscent of the guys that, I certainly spend time around, and I'm sure you spend a lot of time around, where it's kind of like, here's what you need to say for the IPO to be oversubscribed. Yeah. It's like, what does that have to do with your business? Like, here's what you have to say. Here's the tax shield. We don't expect the MLP to pay any taxes for at least 5 years. We plan to grow the dividend 10%. Like, what about a depleting like PDP business is the 10% dividend growth come from? It's like, they want to hear a growth rate. We're going to give them a growth rate. And
we call it the annual non-recurring workover. Yeah, no, it's interesting. So I stop at the coffee shop every morning in Richmond, Texas, and the police are always in there. So I chat with the police. I figure that might hold me in good stead one day. But anyway, we were talking about bubbles, and it's interesting. I've actually read a lot of the academic research on bubbles, and literally none of the academics, the experts that have studied it, have been able to figure out the characteristic other than it goes up and you buy because you think it's going to go up, and then people sell because they think it's going to go down.
Yeah.
Because if we could actually because I agree with you. I mean, I think renewables, et cetera, let's just call it broadly transition. I mean, I think that's going to be a huge bubble. We're probably going to spend 5 to 10x what we spent in the shale revolution doing it. And at the end of the day, I don't think anybody's going to make any money at it. And we're going to be lucky if we don't lose half our money.
Well, look, the reality of how financial markets work, and this has been a painful firsthand lesson for everybody in energy over the last few years. And we're finally emerging from that into a better situation. But if there is only $1 billion of wells to be drilled, and there's $500 million of capital available, or there's $5 billion of capital available, asset markets will act very differently. The reality is the world, the physical economy still needs X dollars of investment. Sometimes there will be 5X what you need available. And sometimes like today, there will be 50% of what you need available. Right. And, one of the things that, without getting into too much of the, the boring work stuff, but we spend so much time studying the, charging stations are low single digit return on asset businesses because you've got 100 different guys going out to HEB and saying, how sweet do I need to make economics for you, HEB, for us to put a bunch of these in your parking lot?
Right.
And that's not a great economic opportunity set, but there are tens of billions of dollars chasing that, whether or not it's a good inherent economic opportunity. And then, whether it's mining, whether it's oil and gas, we're seeing these businesses reinvest on average, 30 to 50% of operating cash flow because they have been beaten into submission on you guys always overspend. So they now have to demonstrate that they are legit by underinvesting, and that capital that they used to be able to access isn't there anymore. The guy who did a deal in Boston is gone 5 years later, and a lot of the private equity capital isn't as easily accessible. So, I think the reality is it's not about, people say, oh, green stuff is fake. It's a bubble. It's, whatever. I just, rather than kind of use words that get people emotional, I view it as you have an opportunity set that will consume X billions of dollars. If the capital markets are throwing 5X that amount of capital, you're going to have trouble generating returns. Like, no pipeline ever went bankrupt during that huge pipeline boom. Yet all the pipeline companies went down 60%. Like, right. Why is that? Well, because there was, $20 billion a year of pipeline opportunities, and there was probably $60 billion a year of mutual funds, hedge funds, you name it, flowing into that space during the peak of the shale boom.
So let's break this down because I'm formulating this in my head kind of to talk about at some point on a podcast. And I'll probably talk intelligently then, and I won't talk intelligently now. But what I find interesting is we sit there and we talk about underinvestment, and we're all so damn arrogant that we talk about US underinvestment and all. I don't think that matters anymore because I think what happened in the shale revolution, we told ourselves we were the low cost producer and that we were actually generating the marginal barrel for the world. And I said that with a straight face fundraising. I truly believed it. You know, the George Costanza, it's not a lie if you believe it. No, I really believed it and all. But I think we figured out that for the most part, we're really not the low cost producer. It's still Saudi. So shouldn't the mindset on what prices of oil going to be less about our underinvestment and really more about do the Saudis really have 3 or 4 million barrels sitting on the sideline? Or am I thinking about it wrong?
You know, the way we kind of frame it when we talk about it is any resilient system. Let's use like Texas Power because I lost power in February. You may have had some, but you know, in
Oh, have
Houston,
you not heard my story on this?
no.
So just real quick. So all my listeners have heard this 100 times. So go get your beer or whatever you do during the podcast. So anyway, my dad goes out and puts solar panels on the vacant lot next to his house and the Tesla batteries on the wall, right? And I'm like, Dad, how much did that cost? And he's like, $125,000. And I go, what's kind of the payback on that? Dad's like, well, I calculated it out. It's 12.3 years. And I'm like, Dad, you're 80. I mean, I hope you're here to see payback. But what are we thinking? And so anyway, he sends me his selling back to the grid, kind of every month and all. So ERCOT blows up, all that good stuff. I am down in Richmond. I'm in equal distance, fire, hospital, police. I don't think I'm ever going out on the grid. Of course it goes out.
Yeah.
So I'm freezing in my house. And my house is this old wooden house. Wind is just howling through my house. So I load my cat up in the carrier. I grab a bag of clothes and I go over to my parents' house. I walk in. Dad looks at me. 12.3-year payback don't sound so bad right about now, does it? Anyway.
Yeah, I mean, but no, I mean, look, like the reality is every resilient system that is not prone to failures and price spikes and price collapses has to have a marginal. I find it easier to think about, this marginal concept and how we talk about it in our meetings. The marginal concept is easiest to understand on the power grid. You don't it's easy for a New York Times reporter to come to Oklahoma or Texas and say, Old Bessie is the dirtiest coal plant still in service. And Old Bessie is an eyesore and it, pollutes the air. But the reality is Old Bessie runs like 2 days every year on average because she is the thing that makes sure the grid doesn't completely go out. And one of the challenges with divestment that's being created across the whole energy space is the fact that a plant that's on for 2 days a year is very hard to model out and say, Old Bessie will definitely pay you back 100% of capital next year. It's hey, let's keep it around for the next 10 years. And one time, temperatures are gonna go negative and we're gonna make 10 years of our capital back. But because companies are being forced to rationalize, always sell non-core assets, your valuation's getting hammered. All of these marginal assets, whether it's, Bakken oil production or whether it's coal plants in Oklahoma and Texas, they're all getting decommissioned at an accelerated pace, right? Because we're going through this kind of divestment period where the available capital is getting smaller. Available capital gets smaller. The right answer as a company trying to survive or thrive is to divest your non-core assets. And I think when you look at, the oil market, the real problem was that Saudi is your big nuke plant, right? Saudi should run 100% of its capacity all the time.
Right.
You should not be telling a guy like, hey, pull out the uranium rods. Somebody just turned off their lights. You want to have the nuke running all the time. And then it's your kind of, janky coal plant, which is kind of the, scoop stack, DJ, Bakken, Eagleford, like, hey, prices are 80 or 90. I need you guys to ramp production in the next 6 months. I think the real challenge that the oil market has experienced is that the debt loads of a lot of marginal oil producers in the US reflected being a nuclear plant. When you're a nuclear plant, you run all the time, you can have debt because you don't have to worry about getting shut down.
Right.
The Bakken is kind of like, parts of the Bakken, I'm sure I'm exposing my ignorance to a lot of the technical, experts that listen, but, look, the Bakken should not be levered up 60% debt to cap because it might not be needed in the dispatch stack for a year or two. And you should have a business that's able to go into base decline without a catastrophe, right? And I think like CDEV's the perfect example of went into the downturn with the lowest debt load, tried to go into a mild decline, and quickly became 2 times levered. And then once you're 2 times levered, it's, hey man, you can never decline again, because if you decline anymore, you'll be 3 times levered. And then if commodity prices go down, you'll be 4 times levered. You'll be headed towards, BK watch. And so I think that's like the big concept that we talk to our clients a lot about is like, rather than thinking of like Saudi good, America, bad, or Saudi's reliable and America's kind of like the janky, just understand that an industry that is only needed in case of emergency, which really marginal shale is an in case of emergency asset. Like you could argue right now, the Haynesville, if we had better, bigger LNG export facilities, like Haynesville is a perfect just in case asset when Europe is freezing and Europe is having to shut down fertilizer plants and shut down factories because they can't get gas. Haynesville can add a B within the year. And so whenever whenever the inventory level starts to look nasty, there should be the ability for a shale company or a shale basin to ramp up. And I think the problem is with this idea that shale can always get cheaper, always get more efficient, like, oh, put debt on this business, like put a lot of debt on your tech business because you're always lowering your break even. You're always, kind of getting more competitive. And I think with shale, it was, no, you're not an always getting better asset. You're actually just a high cost asset that shouldn't run with that much debt.
So the last podcast I did was I actually gave a speech to the Lafayette Geological Society. One, didn't know they had a geological society, but lo and behold, they did. And 2, they actually had it at the Petroleum Club in Lafayette, Louisiana. Didn't know they had one of those either. But anyway, one of the things I said that I don't think I appreciated until March of 2020. So, I mean, literally the week before the price fight between the Russians and the Saudis is I was up there. Kiddo was at Model UN. So I just told everybody at Kane, hey, I'm available to talk on the phone, but I really want to spend all day going and talking to public folks just to hear, hey, I'm private equity, you're public doing energy. Let's compare notes. And one of the things I picked up on, because we all know that, capital's been withdrawn because we've sucked, right? We've generated a lot of red. There's the green problem and that. But I don't think I appreciated, and it you just laid out for me this whole point is a lot of capital went away because people truly think oil is going to be $60 a barrel or less for the rest of our lives. So that optionality of that price spike, old Bessie, as you say, running 2 days a year and you making a gazillion dollars because ERCOT's a mess, U.S. or oil prices, that spike that historically always happened because of bad stuff, right?
Yeah.
A war, Saudis go on strike, do an oil strike, whatever the case may be. They truly don't believe that's ever going to happen again. And I think if you poll a lot of Houstonian energy people, we all think it's going to 100 and 125 for all the reasons you say. We've underinvested and the like. I don't think the rest of the world thinks that.
Yeah, no,
I mean, 5 years out, we're at 57 or something on the curve. So
yeah, I think it's important to remember, especially as an investor trying to take a multi-year view in our job. I think one of the things that I really try to keep in mind is use Occam's razor and cut out the things that don't necessarily add explanatory power to the narrative. And I think you've laid it out great on your podcast where you say there's a red problem and there's a green problem. And to me, I was a tutor of, local Rice area youths who were trying to up their SAT scores when I was at Rice. And there was, this kid that I tutored, and I remember every time I'd show up and he would ask his mom for a grilled cheese in a tone of voice that like made my skin crawl. Like it was like Will Ferrell, like, "Mom, grilled cheese." And I'm like, and we'd sit and I'd be chatting with him about like, what's going on. It's like, man, algebra, like, algebra, like teacher's the worst, teacher sucks. And I was like, well, what's the problem with the teacher? He's like, well, she hates lacrosse players. And I was like, maybe we can use a little Occam's razor here. I was like, what's your algebra average? Well, like 68, 69, like, okay. And that tone of voice, like the grilled cheese tone of voice, do you use that with the teacher? Like, well, no, but I mean, I sit in the back and I kind of let her know that her class is boring, and I'm like, so let's remove the lacrosse explanation because I don't think it adds a lot. I think if we stick with gruff 68 in her class, we're covering 99% of the explanation, right? And I think when we talk to people and they say, I talk to private equity or public equity management teams and they say, man, I guess if I had a scammy sales pitch like XYZ Solar or Tesla, I'd be in a lot different position. And it's, hey, we've got three things to unpack here. You can't find investors. You spent 10 years losing money, and people are really mean to you about your green credentials. Which one of those three things could we drop and still explain pretty much 99% of what's going on here? And it's like, okay, well, we're providing an essential service. Like, well, gas demand in the US has gone up by mid-single digits. I mean, nobody can say that gas demand isn't growing like a weed, right? I mean, you add exports on top of coal to gas switching, like gas demand over the last 15 years has grown meaningfully. Just production has grown more. It's not like the market, it's not like these mean green guys have shut down all the power plants you sell to. It's not like the restaurant in Cal, in right next to Cal Berkeley campus that shut off its gas stove. Like that didn't hit your bottom line, right? What hit the bottom line was, again, going back to this, we had our kind of moment shortly before COVID as an investment shop where we said, okay, before 2014, we grew, 4 million barrels in 5 years. Post 2014, post OPEC warning shot, we've grown 20% faster. Because that's when you kind of go into the pilot, you go into the pilot's cockpit and you just see the sticks just bouncing and the pilots, you kind of say like, so you're drilling regardless of your break even because you have debt service as your main focus. Like, okay, like this is why investors get frustrated, right? It's the business was incorrectly capitalized. Do they really care? Like, do the people who left, would you have been able to keep them by putting, a solar panel on your compressor stations in the field? No, you wouldn't have been able to keep them like that. You would have been able to keep them by just hitting them in the face with excess cash. And unfortunately, there was none to be had because of the way you capitalized your business, which anticipated, $100 oil indefinitely. And, $100 oil means 2 turns. That goes to 60. Now
I even think it was worse. I don't know that it was $100 oil in the model. It was more Aubrey's going to pay me X.
Well,
yeah. I mean, right?
Yeah. For
for
public perspective, you're right. For a public perspective, it was much more like, what does 100 imply? I think, on the private equity perspective, it was totally like, let's just run 50 feet in front of the gold speculators and then sell them this dirt. And then we'll run 50 feet further. And there was definitely a real estate, and even today, right? When I talk to endowments or institutional capital, one of the conversations that we have is just this idea of, was the huge investment boom, which almost every endowment got very involved in, I'll say upstream private equity. It's like, how many of those were cash flow? How many of those were E&P businesses versus how many of those were extremely well-informed, like real estate plays, right? Like you guys know the industry extremely well. So you can go pick out a plot of land and say, this would make a great strip mall with a Chick-fil-A anchor. You have that skill, but how many of those businesses were truly like, even if no one buys us, we're going to make a ton of money just cash flowing this asset out? I don't think that happened as much. At least that's my, semi-informed impression.
No, I think saying the same thing a slightly different way with some hindsight looking at it is one of the things we did as private equity is you wanted to incentivize the management team to sell,
Yeah.
right? And so we created these waterfalls with these back ends that as we, the private equity firm, do better and better, you get a bigger and bigger share. And so to some degree, you almost didn't care above a 2x, what you were giving the management team because you're like, man, I got my 2x. And what it did on the positive is if you're in the big splits with the management team, in the waterfalls and it's call it 50-50, they realize that $10 million well, 5 million of that's their money. So
Yeah.
they get incented to sell. So that's a good thing because you had people wanting to flip. The bad thing in hindsight is what we were all doing. You called it real estate. I'm going to say it was venture capital. I mean, it literally was early stage type assets. When you go to the Powder River Basin and decide, let's do the first slick water frack, I mean, that is venture capital. I mean, when
Yeah.
your analogy is states away, I mean, that's just right. And so what happened is the reason venture capital works so well is you own Microsoft and you can make 100 times your money. It makes up for whatever the rest of the fund was. When we have a venture capital portfolio, and I don't care what any of the guys say, we all had it. It was us, NCAP, NGP. At that point, we were all doing lease and drills, early stage stuff. When you have a venture capital portfolio, there's nothing wrong with that. But when you're going to be capped out at 2x or 3x because the management team's going to be incented to sell, you don't have that 10 to 15 to 20x that carries the rest of the fund.
Yeah.
So it came down to just bad portfolio construction.
Yeah, no, look, I think that's right. I think another thing that markets again and again show you that when a market is figuring something out for the first time, that is the most likely to contribute to a bubble environment, right? Throw more money at a problem that doesn't seem solvable. Now, obviously, I mean, you probably recall even more clearly than I do, but in 2001, I was about to graduate high school, and you can see the Twin Towers from my high school, and that drove an idea of, man, how much are we relying on other countries for our energy? And people, it sounds kind of hokey and it sounds kind of like drill baby drill or like, like a Sarah Palin kind of soundbite now. But there was across the spectrum, hey, if we can throw money and throw technology at the problem domestically and eliminate 80% of our energy imports, let's do it.
Yeah.
And the nuances that you're talking about now, which are totally fair and accurate, are the natural retrospective nuances, right? Like I kind of joke with my wife, and again, like I'm not a green hater. I try to think about like if green, like oil and gas 10 years ago, green today, by the time we are, kind of our kids are having kids, there will be big solar arrays that are getting disassembled. There will be better uses of land than just occupying land with a low energy density 3-hour a day power plant, and trying to just kind of visualize like this willingness to throw unlimited dollars at a problem that seems unfixable always ends. And it ended with oil and gas, and with green, there will be a time where people are like, half the state of Iowa is now reflective. Was that really like the straightest line from point A to point B?
Right.
Like there's 8,000 degree fires in this battery station, like in, downtown, whatever, because they need swing power capacity. And instead of, God forbid, this natural gas plant running a few hours a day, they wanted to put this massive battery array right here in town. And when it ignites, it goes off to the tune of thousands of degrees. Like, was this our best and final answer? And I think the answer is probably going to be no.
Well, and that's the thing that bugs me right now, and I wish I could do something about it, is, you have extremes on both sides. We'll call it hardcore environmentalists, and you've got hardcore energy loud, energy proud. Those two groups are never going to talk. But it seems like there's a fair amount in the middle that could have some of these rational discussions, like, pick a rational environmentalist just saying, hey guys, I know we want to force the majors to reduce their emissions, But if they just sell it to private companies,
It doesn't help
it
anyone.
hasn't happened. It hadn't helped. And believe it or not, Exxon's a better steward than XYZ, you know?
No, you're totally right. And, you know, one of the things that I've gotten to do, which has been cool, you know, since starting Recurrent, really, we're research guys. We love investing too. But at the end of the day, hey, I'm good at picking Exxon versus Chevron. Okay, stay in touch. And,
Yeah.
you know, you have to have some research. You have to explain how you think about the world. We put together a piece on electric vehicles back in 2017 saying, you know, anybody with a 2% market share can talk hypothetically about what their business looks like at 50% market share. But the reality is, you know, 2% to 40 and 50% involves a massive difference in how you run your business, how logistically focused you have to be. You have to make sure, you know, when Elon sold his first 100,000 Teslas, he didn't really need to know that Glencore is running a mine in the Congo that produces those minerals. Now he has to directly contract with Glencore to do Congolese mining to get Tesla what they need to make those batteries. You know what I'm saying? And so
Right.
there's as we walk through that, I randomly got invited by a very academic symposium during COVID, a group called the Clean Air Task Force. And you know, when you walk into a room and you're like, oh wait, I'm the bad guy. Like I thought I was the thoughtful nerd. Like my e-scooter, which I sometimes ride to work, was in the background. I was like, there's an e-scooter back there. You gotta believe me. But you know, the reality was it ended up being really productive, even though typical kind of academia, everyone had to explain their very nuanced position for 2 hours before it could be discussed. But you know, basically what came out is you had professors that said the technology for electric vehicles is going to allow us to completely get rid of oil as a transport fuel. And my job as one of the kind of 20 different panelists was to say, so the mining industry is also getting divested based on ESG grounds. You have to increase some of these minerals by 10 or 20 fold in the next 20 years to hit those targets. And it takes about 5 to 10 years to go from greenfield to an operational mine. And that assumes that there's not a civil war or whatever in the country where you operate. And so as, you know, the academics kind of said, oh, you know, what industry are you from? Like, are you from Exxon? And, you know, the guys from Toyota and Ford who were also on that panel kind of said like, hey, I'm Toyota. I led the charge on hybrids. When gasoline went to 5 in 2008, we had a model internally saying we have a 5-year wait list and we're only at 2 to 3% hybrid penetration. We are going to sell 50% of the world's market share of hybrids. And he said, you know what? We got to 4%. We got all the early adopters, the Trader Joe's shoppers, and we've been at 4% since 2009. And it was great perspective to hear somebody from a real company say like, we've now, you know, Ford chimed in, like I've introduced 19 different electric Fiestas and Focuses. And guess what? We've discontinued all of them because you can't force someone to go from an F-150. And now we're introducing an electric F-150. So we're trying to address that. But the F-150 is going to take a whole lot of metals and minerals out of the ground because it's a huge battery. And so you start talking to people who are multidisciplinary, and you talk to the guy who says, I'm a solar developer. You would need to give me an entire state of Iowa right of way to get to that academic's forecast. You can't give me the entire state of Iowa. People want to grow food there. You know, I can't block out the sun on all and as I listen to all these other experts, you started kind of getting this idea, well, hey, we don't have to make everything electric, but we can make, you know, renewable fuels. And then the guy chimes in and says, you know, my job is processing cow parts into renewable fuels. You would have to quintuple the cow population of the world and slaughter them at a certain cadence to get, which by the way, would deforest and depopulate all these other areas, which would make them that much more susceptible to global warming if you want that much renewable fuel. And before long,
and by the way, they like to burp and they're going to be spewing methane.
Yeah, they've got their own emissions. And so the thing that I guess I'm an optimist at heart, and the thing that I do truly believe is, you know, you've got a family, I've got a family, my house is always falling apart. I've never been to your house, but you know, it's like when my wife is like, hey, you know, one of the gutters is kind of hanging off. I'm like, I'm sorry, that didn't make the top 10 of priorities, you know, and the reality of the capitalist system, which, you know, as much as people bag on it and it's selectively beaten up, when something's a real problem, it jumps to the front of the line because real problems make real money, and real money makes changes way quicker than anybody would have thought. Right. And I think that ultimately, as I talked to these experts, it was like, so we're not going to get rid of the last 40 or 50% of our fossil fuels. We're just going to have to carbon capture them because you're already eliminated by land usage, by mining, by, you know, cow populations. You're limited on all these other niche 1% technologies that a lot of, you know, folks just extrapolate to a 50% market share.
And what I've always said about the United States is day to day, we actually don't do that very well. You know, it's the United States. It's kind of, we got to go solve this problem or that problem, the gutter problem, not in the top 10. We don't do that very well. I will never vote for a Houston mayor for higher office because I blow out a tire once, twice a year because there are potholes everywhere. We don't do day to day very well. But when the shit hits the fan, we do that really well. Go ask the Nazis. I mean, seriously, when stuff goes down, the United States actually circles up the wagons better than anyone. So I kind of have a tendency to agree with you that when there's true evidence that this is a material problem, ingenuity, technology, capitalism will solve it.
That's right. And look, I mean, you know, you can imagine my younger brother is in Brooklyn, and his ex-girlfriend, I'm confident he'll never make it this far into the podcast, but you know, his ex-girlfriend, you
Don't
know,
worry, my mom will.
Yeah.
My mom listens to this, so we've got that going for us.
You know, she comes to Thanksgiving. She's, you know, nice. She's from the South, but she's kind of gone to Brooklyn to make a statement to her family. And it's like, you know, she's got the sleeve tattoo and you know, we're talking about this in a very kind of not angry, I don't hate you, you're letting me stay at your house, so like, thanks for having us in Houston. Right. And I was like, look, you know, most people have a mental model of how human beings behave, whether or not they know it. I think in investing, you have to think a lot more about, you know, what hypothetically will happen. But I kind of said, I was like, I live on the Gulf Coast and I'm not from the Gulf Coast. I don't have any weird kind of like emotional, you know, like they're going to destroy this coastline. I also don't have the weird emotional other direction of like my grandpappy did this. So like, I love this industry and I want it to survive forever. But just from a very rational perspective, I was like, you have to build me a model where my personal consumption decisions change weather patterns in a way that affects my family's safety in the next 50 years. Like I'm average Joe American. Show me a model where I'm changing my behavior and my kids are not getting hit by a tidal wave here in Houston. And she was like, well, that's a ridiculous. I was like, but that's really how people think. Yeah. People start with how safe is my family? What are you telling me? You're telling me that Miami needs to build higher walls in the next 30 to 50 years. And if we were perfect from now on, it probably still wouldn't save Miami. It would probably save Miami 100 years from now. And even that's based on a model with a certain amount of uncertainty. You have lost the average American decision maker in their household so long ago. And that's why these debates have to become emotional. Because if you're a politician, you're like, hey, you know, Chuck, think about the 0.00001% improved livelihood of your great grandkids if they choose to live in a hurricane zone, you know, right. 200 years from now. And you're like, yeah, I'm not buying one more or one less bottle of water, or, you know, soda based on that. And it's like, well, in that case, this is the apocalypse. You're destroying the world. And if you don't change something about it today, you know, it is a religious, you know, again, the philosophy major in me, it is a religious argument, which is, did I scare you with the be a good person spiel? No, I'm still going to do whatever I was going to do before. Well, in that case, let me introduce you to the really scary kind of like afterlife punishment type stuff. You know, like when you're in philosophy of religion at Rice and they kind of say like, let's talk about the functional use of these arguments. You can see that in the green debate, right? It's like the chances of Brad Olsen's, albeit large 6-person family changing consumption in a way that changes weather patterns has no logical appeal to me, really. Even if I believe in climate change, you know, which right. which I do, but it's the I can't do anything about it. Well, if I didn't get you with the logic, I'm going to hit you with the really aggressive emotional arguments. And obviously you only have to be on the internet for about 15 seconds to hear all those.
The thing that scares me about it is we actually can't have this discussion. I mean, we've gotten to a point, and this is all of politics, where you literally can't say, hey, let's talk about it. Because one thing I have, so you know who Mark Mills is,
Yeah,
right?
yeah.
So Mark and I sitting there having a drink, and Mark throws out, you know what's interesting, Chuck? Last year, COVID, quarantine, we shut down the world, right? Yeah, fair enough, Mark. He goes, you think we burned less hydrocarbons? I said, well, of course we did. You know, we shut down, nobody's on the road. He goes, yeah, I did a little math. We burned 10% less hydrocarbons last year than we did the year before. I go, wow, that's pretty interesting. He goes, what happened to the CO2 parts per million in the atmosphere? I was like, well, Mark, that's a good question. I don't know. And he goes, kind of funny we don't hear about that because if it had gone down 10%, don't you think we would have heard about it?
Yeah.
See, it's right. See, if we stop burning hydrocarbons, CO2 will go down and we won't have global warming.
No, I think there's a lot of the politically loaded stuff, which, frankly, I think being a, poli-sci philosophy major, I feel like I got a lot of that out of my system at Rice. And, I even joke with my partner, Oliver, that he loves like the red meat political discussions. And he's, I think, sometimes disappointed that I'm just kind of like, okay, because you're not changing anyone's opinion.
Right.
It is a sporting event at this point.
It's a freaking echo chamber.
It's a sporting event. And it's like, hey, man, I'm wearing my Tom Brady jersey and I just want to approach you in your, like Buffalo Bills, like Bruce Smith jersey and just kind of have a rational debate about this. It's not that it's bad. You should always be trying to have that debate. But I think the reality is, right, the most effective carbon reduction that the U.S. has done in the last 20 or 30 years is replacing coal with gas in our power stack. But that didn't, giving kudos to the gas industry is not, that's not, that doesn't align with the other objectives that are trying to be accomplished by kind of the decarbonization and electrification movement. It's similar with Tesla, right? There was a great study that I shared with some friends that a guy put together, and he came to the same conclusion basically as we did a few years ago. So if 10% of humanity wants a 300-mile range F-150 Tesla X, Tesla S, then 10 to 15% of human population will effectively monopolize all of our minerals for the next 30 or 40 years.
Right.
We could say, instead of 10% getting 100%, why doesn't everyone have a 10% electric battery car? Because the reality is I drive 6,000 miles a year. I go to my workplace, I go to HEB, I go to pick up the kids from school. The electric battery at 10% of the range, at a 30-mile range, 10% of the size of Tesla, would cover all my needs, would basically completely decarbonize me personally, and would leave 90% of the battery available for other people who want to use it.
Right.
Well, you're buying a petroleum car. Like that doesn't achieve the goal.
Yeah.
Like you're still buying a petroleum technology and you're like, man, like we could decarb 100% of the population, or we could like virtue signal 10% of the population. And if those are the choices, sadly, it feels like people are more inspired or motivated by the let's virtue signal with 10%.
Yeah, we don't get any sort of benefit for incrementalism. And I think where that comes from, and I've said this too many times on the podcast, but I'll say it again, is just when you get outside the extremes, and you have a rabid environmentalist, but who's willing to chat with you, they reach out to me all the time. So I'm chatting with these folks, and it's like, don't tell anyone we're talking. I'm like, fair enough, I won't do it. But I'm chatting with them. You know what it comes down to? They actually just don't trust us. So they actually think they are morally correct in saying the world's going to end and all this, and not giving us the incrementalism, because they're like, you lied about climate research. We see what you guys have done, polluting this and that. We just think you're after the almighty dollar on this. We don't trust you. And I'd love to be able to figure out something so that you and I could sit down with those folks and say, all right, let's be reasonable about this. You know, a pipeline leaks a lot less than trucking does.
Right.
You know, can we think through this one? You know,
Well, the two things that I view, like, you know, I sit on my phone with everybody, you know, I can compete with anybody in hours of screen time. And, you know, my wife and I are both those classic people like, man, we're on our phone too much. But the reality is today, you know, trust is built when you think you're going to have a recurring interaction with someone that's going to benefit you both. You know, obviously on some level, I jumped on the podcast because I was like, never met Chuck before. I'd love to be able to go to TPH or any things around town and say like, hey, I know Chuck. Like, I'm going to see
dude,
Chuck
I
from
wouldn't
now.
do that, man.
Yeah, maybe wrong. Yeah.
Yeah, I was like, whoa.
But you know, the reality is if you are in a group where you say oil and gas guys meeting with me under the cover of darkness, you are very much the kind of like, you know, white settler and Native American, just kind of like, next time our crews meet, it's not going to be friendly and it's not going to be good. And so we can do it individually, but it's very hard because there's no anticipation that there's going to be a regular constructive dialogue. So it's hey, you know, oil and gas guys are kind of hurting. They've lost a lot of money in the last few years. They're hitting a really conciliatory tone, but they will not be willing to they will not be able to continue that dialogue when they're in the money again. Right now, renewables are in the money. Why would we, you know, I've made the joke in a lot of fundraising meetings that energy right now is kind of the guy under a blanket and, you know, holding a sign, and, you know, the renewable guy is in a suit and he says, hey, Slick, you know, hey, Slick, like 10 years ago, that was me. And the renewable guy's like, nice try, you know, and he keeps walking. And
I make the joke about back in the day, we used to print up bumper stickers that says, you know, freeze a Yankee. It was just like, we're on top of the world.
Yeah, totally. I mean, I remember hearing that for the first time at Rice because it was my first time in Texas. And I was like, wait, what's the concept? And as they explained it, I said, well, I think in order to better understand, you know, I was thinking about this the other day. There's that famous scene from Mad Men where like the really frustrated, pent up junior guy is like about to cry because he's so upset. He thinks that Don Draper's been dissing him or ignoring his work. And he's like, every day I look at you and I just think how miserable you must be. And Don Draper just looks at him and says, I don't think about you at all.
Yeah.
And like, I remember having a conversation with a guy from Oklahoma when I was at Rice. And I was like, you're thinking to yourself that, like, you know, the average kind of like Westchester, Long Island, Connecticut, New Jersey person thinks at all about sending $300 a month to their gas bill. Like, if you think it's a very kind of like, this is our industry, this is what we care about. The guy in New Jersey is just like, don't dig up my backyard. That's right. Job one. Job two is you're telling me 300 goes to 350. Don't care. Right. You know? And so I think a lot of times it's not understanding the context. It's not believing that you have a reason to build a trust relationship. And it's also, look, I mean, the reality is one of the reasons, you know, we joked about skilling. One of the reasons I'm not on Twitter is I fundamentally, like, I have to pitch my business all the time. I have to pitch our investment strategies. I have to present us in a way that is compelling in a fairly bite-sized time frame. The idea when I read, you know, on Twitter, everyone is trying to give you a worldview that is 200 characters. And you kind of sit there and you're like, I get why that's efficient. You don't know what you're going to like and what you're not going to like. Like, hey, this guy's funny. This guy's not funny. This guy's funny. But when you live life like that, where you're trying to establish everything about you in the first 3 sentences, it does eliminate the nuance, right? It's like when I was on that Clean Air Task Force panel, hey, you know, Brad, like, interesting comments on electric vehicles. Exactly how do you make money? Well, I invest, you know, we've got a few $100 million of primarily fossil fuel energy investments. Okay. So everything you're saying is motivated. It's like, no, you don't understand. If I saw different economics and a different opportunity set in renewables, we'd own renewables. But I see an industry that's getting divested from, leaving a huge swath of economic opportunity that nobody's grabbing for right now. Like, believe me, when there's no ideological, like, I saw the energy industry spend its way into foolish, like, you know, we talked a little bit earlier at TPH. I just put out a report that was, hey, I don't know the answer to this. does anyone know where we're going to get the chemical plants we need for the Granite Wash to triple in size and for the Marcellus to double in size? And everyone's like, you're an idiot. Why do you hate the oil and gas industry? And I said, hey, like, I'm just curious. Don't you want to know where your customers are even coming from? It might take 6 years to build a chemical plant. And as I talked to the chemical industry, they said, we never hear from any of those guys. Chesapeake doesn't call us, Range doesn't call us. They just kind of assume we'll take their product. All of our investments are in the Middle East. We don't invest in the United States right now. And so just that realization that the way the markets work, there are a lot of inefficiencies caused by people not talking to each other or just assuming that the solution's going to appear when it's messier than that.
When you sell a commodity, you don't have to market. I mean, say what you want. Amazon, they know where all their customers are. They know what all their customers want. Nike knows it and all that. So what is the pitch for your business? What do you guys do?
A Recurrent, we started it close to, I guess, 5 years ago now. Mark Laskin, who's my partner, he and I were the PMs running the long only business at Boone Pickens BP Capital. We, started Recurrent about 5 years ago, and really the pitch, which is going to probably underwhelm with its lack of ambition. There were so many private equity funds. There were so many complicated hedge funds like, hey, in a world of oil price uncertainty, you want us to, have a long short book where we're, doing all these fancy things and charging you huge fees. Our pitch to clients was pretty simple. It is, this market's way overcapitalized on the private side. Public is going to see capital leave first because you're not locked up. You're not in a 7-year fund. Public capital is leaving every day. And what's left is going to be a great long opportunity. Now, using our Nostradamus, compass, we were kind of like, man, 2020 is going to be the year when this thing all comes together. And but the pitch was really, you've done so many gadgets and gizmos. If you're an endowment or a pension, you've done so many levered holding portfolios. You've done so much ultra concentrated, run by a geologist who knows every layer of the Permian, in great detail. And we kind of said, like, the opportunity isn't from a 10% better understanding or 10% worse understanding of the geology. The opportunity is that this is a massive industry whose underlying demand changes very little every year. And the amount of capital available to it is going to be reduced by 50%. If you are one of the few guys that we can kind of convince to put your money in at a time when everyone else is getting out, there's going to be choppiness. It is the changing of the old guard to the new guard. The Fidelities and Wellingtons who were max long energy in 2016 are now, fleeing the battlefield, and that's going to be choppy. But if you stick around, there is going to be this, it's just us, right. It's just us kind of moment. And I wouldn't say it's just us, but we're probably the only long only energy firm that's grown in the last, 4 or 5 years. And it's been, as you can imagine, brutal during COVID. There are a lot of people, frankly, looking you in the eyes and saying, like, I trusted you guys. And obviously I don't blame you for COVID, but like, I'm also an agent. I have to sell this to an end investor, my client, and right. You guys have made a ton of sense on why EVs and renewables will draw capital away from oil and gas and leave great opportunities behind. But during COVID, like, how do I sell this? And that's been the real gut check stuff. And, at the end of the day, the skilling thing, I always kind of say, like, when you're getting those no's, or we can't do this right now, or we already shot our wad on oil and gas and we just can't look at it. We do also invest in mining and natural resources, but a lot of folks have just said mining and natural resources are still kind of a hot button with the student body or what right. have you. And of course I laugh and say all of the copper, steel, and aluminum that gets put into wind turbines and solar panels and electric vehicles is getting dug up by an increasingly small and undercapitalized group of miners who are spending most of their money on just ESG proofing a lot of their operations instead of new capacity. So, I think the investment setup is probably as good as it's ever been. Getting people to not give up on a sector that has hit every branch of the tree on the way down has obviously been tough, but look, it's like every entrepreneur says, I feel kind of silly even saying it, but it's like the 3 to 4 year J curve, like going through the belly of the downturn and then kind of finding on the other side that people are like, I stuck with you And it actually seems like things are, we're running out of natural
Right.
resources. It's not a simple transition. Metals and mining prices are through the roof, and yet there's no new CapEx in any of these industries. We're starting to get some of that intellectual kind of recognition of like what you guys
Yeah.
said made sense. But as you can imagine, COVID is just a total, I don't care what you said. I'm setting my hair on fire. My clients are mad. And, getting through that was definitely a gut check, but where we're at today, I mean, we feel pretty good about.
So not specific names, but just in general, who's the investor base? Who's receptive to that story might be the better way to put it.
It's funny. A few weeks ago, we were in or maybe a couple months ago, we were in Minneapolis, and there was kind of a retired executive who was. We're at his like little office space on the lake, on the shore of Lake Minnetonka, and he was like, "Man, when are we going to get like the family office guys, who are just looking out at Lake Minnetonka back in this sector?" And I was like, we're on the banks of Lake Minnetonka. Like you're in the sector, like you are the guy, right? It is I've spent a career in business, or I've, I've managed clients' money for decades. And, I know that these things come and go, and that the end and the beginning of a cycle is always more violent and turbulent than anybody would have guessed. But it is that family office, the small endowment that says like, hey, we're just managing a museum endowment. We're trying to do the right thing. We're not trying to satisfy a student body. Like that's been a little bit more. And then a lot of, independent wealth management firms. I mean, I'd be lying if anybody who's listening, who's an entrepreneur, right? I mean, when you're an entrepreneur, there is a certain fraternity that I don't even think I had no idea about. I was a first time entrepreneur when we launched Recurrent, and you go into the Morgan Stanley office or the Merrill Lynch office, and it's hey man, like I'm an employee of Merrill Lynch. I've got a tea time. Give me the fact sheet for your fund and get out of here. And when you talk to a guy who's like, I remember my first $100 million when I built my wealth management practice, and people were trusting me as the CIO to do better than I was doing at Merrill Lynch or Morgan Stanley. You guys are basically building that, you're going through that crucible right now. And so I'd rather use you than Kane Anderson or Tortoise, because frankly, like when I call you guys, you're going to pick up the phone. Like when this fund goes down, like your net worth is getting hit because you guys are kind of all in a way that probably only an entrepreneur can really fully be.
Yeah, no, it's interesting. Investors were almost kind of bipolar in their nature, in that they said exactly that, hey, we want you guys, to be sole purpose. What you do every day is energy and the like. But then on the other hand, it's like, well, we don't want to have 872 managers. Hey, Blackstone, if we give you $5 billion, can we get energy exposure, healthcare, and bonds? And so it was really, best of times, worst of times, if you will. And I think ultimately what we're going to see in the money management business, and what we've seen, is almost the way of the cellular phone business. You're going to wind up with, call it 5 to 10 just big, huge, massive players that get every dollar, and all they do is get to consensus type returns, and they should be index funds anyway.
Mm-hmm.
And then you're going to have the whole host of smaller guys like you that are focused on it and stuff. And so any alpha nature to your story, or are you just out selling beta?
No, well, look, I mean, at the end of the day, I think we're all probably more beta than we want to admit. And that's like the intellectually honest.
We're all just freaking beta.
I mean, the Rice
sitting on the sideline, we're all beta.
If you had gotten like the UT Plan 2 guy in here, he could have told you the alpha story. And I'll tell you that, it's hard to parse out alpha over time. But I'll give you kind of a simple pitch is, energy, because it's so hated, everything trades at the same kind of crappy valuation. And some assets in the energy patch are 20, 30, 40-year assets. And then, a pump truck might have a depreciable life of 3 years. And yet the multiples all kind of hang around this like mid-single digit place. And so there's a lot more that goes into it. Individual company kind of understanding how sustainable returns are in an upcycle as well as a down cycle is a big part of what we do. But what we, in a lot of ways, what we really try to do in our energy portfolio is, you've got a Canadian oil sands company who's basically invested a ton on their front end. Like, during the boom times, they built out this massive complex that really never needs to be changed. And now all they have to do is just kind of poke a new hole every few months and then steam the oil out of there. Now, what everyone says is, well, aren't the costs crazy high? Yeah, the upfront costs are, but they're sunk. So you're talking about a business that OpEx plus maintenance CapEx is like 10, it's definitely under $15 USD. You talk about reinvesting in the drill bit plus OpEx in the Permian, it's higher than 15, a lot higher than 15. Yeah. Now, the big stumbling block has always been, well, you're stuck up there in Canada and you've got to transport a lot of your stuff by rail. Right. One of the things that's been kind of cool is, with Shale kind of, taking the brunt of COVID, a lot of your pipeline capacity just got freed up for companies who, frankly, did everything right except for transport. That was the one thing they couldn't get right. And so we look at a company like an oil sands company and say, my Permian producer is trading at 7 times. My Canadian oil sands is trading at 5 times. And my Permian guy has a 10-year economic runway. My oil sands guy has, I would say, a less hype-prone 25 to 35-year reserve runway, which is truly not like counting on different horizons and different step outs, but actually just sitting there in the tar, basically. So, like that's an example of an asset where we think its long duration is underappreciated. And so if we both buy, an asset for 6 times cash flow and one cash flows out for 10 years, the other cash flows out for 25 years, I'm just going to see a lot more of those those upward spikes that we talked about earlier, that when they happen is where you end up getting a lot of your capital back.
Yeah. It was when I was back at Stevens way back in the day. So I guess I left Stevens in March of 2001. What I found counterintuitive, if you would, is, and why I did not practice this at Kane Anderson is beyond me. But anyway, it was, now that I'm the senior elder statesman, I can say it. But one of the things we found was, beta so dominated energy, as one would expect, that actually in the beta run, the worst performers or the worst assets did better.
Yeah.
They had too much leverage, whatever the case may be. And actually where the good assets / good management earned their keep was in the down market.
Yeah.
They weren't as bad as others. And so, I mean, to your point, if you're long only and you're selling the beta story, the better the assets, the better the management teams, keeps your clients in the downturn.
Yeah. And look, I mean, the alpha, both strategies have definitely compounded outperformance over time and during COVID. So there has been alpha. I think the humility of investments punch you in the face every day, saying like, I'm more of an alpha guy, it's like one of these. But look, I mean, I think the reality is one of the reasons that I do like being a Twitter lurker, right, is emotions being high coincide with inflection points. And I remember in our natural resources portfolio, Mark's my partner, and we were sitting in the backyard kind of 10 feet away, like, how contagious is this thing? It's, March 23rd. And Mark kind of looks at me and says, like, on the resources side, I think we got to buy like aluminum smelters. And I was like, in energy, because of the debt problem we talked about before, so many of these buy in the dip have just been widowmakers, and meanwhile, metals and mining companies got told they were going out of business in 2015 and they've been paying down debt for 5 or 6 years. And so it's like, oh, dude, Boeing can't keep a plane in the air. They're never going to buy aluminum again. Right. No one's going to ever buy a nice new truck again. What are people going to use aluminum for other than maybe, automated wind farms as we all hide in our homes for the rest of, of time, but then like you go online and people are just like, things will never be the same. We'll never see each other again. This might be the last time you like physically hug, a family member. And you start saying like, this is good because this is actually telling us that the emotional pendulum is reaching a crescendo, right? People are starting to go back to this is going to change my life, my family life, like the way I operate on a day-to-day basis. Like, and sure enough, the aluminum, and steel kind of smelting companies that had only sells from the sell side. Like even the sell side was like, abandon hope, all ye who enter here. Right. And then you look back and now it's like China can't run as hard because of emission and smog problems. Like US is the only place with a gas advantage versus the rest of the world. Wind farms and plane orders are ramping up like never before. And you kind of say like, the only thing you can really do as an active manager to earn your fees over time is be the guy who says like, you know, the guy who steps back and says, in 2008, people were talking about canned food and moving out to the wilderness, and Lehman Brothers was going to take everything with it. Remember that was the peak of the scarcity bubble. We're running out of everything. There's not enough food in Asia. There's not enough oil around the world. That was a great time to short commodities. And, you know, the same way like this, we're never going to use anything again. We're never going to use commodities again. Ended up being, you know, even with the huge dip of COVID, the fact that both of our strategies have made money over the last few years is something, you know, we take a lot of pride in because look, you know, people were talking about a permanent change to all of these industries. And it's been a change, but it's been more incremental than I think most people would have guessed, you know, a year or two ago.
I mean, like I always told LPs with a straight face is whenever you feel like you want to give me the money, you really shouldn't. And whenever you feel like you shouldn't give me the money, you probably should because
it's the best. Yeah, it's the best because look, I mean, I had a moment where, you know, I think we all did like Recurrent was still, I would say, you know, we had gotten to above break even, but COVID was going to send us back to, you know, below break even. And you have those moments where, you know, my wife and I are working across the dinner table. We got 4 young kids and I'm kind of looking at my wife like, how hard should I really fight to do a conference call if there's going to be kids screaming? My wife's mad at me because she's also on a conference call. Like, you know, and then it was one of those things where a bunch of clients who said, you know, you guys said a lot of stuff, which I don't think is discredited or disqualified by COVID. Now's the time. And I remember in a way, it was actually a really great moment because as an entrepreneur, we're all, everybody is hit with imposter syndrome. Yeah. But as an entrepreneur, you know, holding out a card that doesn't have somebody else's logo or somebody else's name, you know, there's that moment of like, would I listen to me? And, you know, like to have a client kind of say like, you know, almost talking ourselves through it, like, hey, we're going to wire you this. Like, we love what you're doing. A year from now, we'll all laugh about, you know, how overdone this was. And you're like, wow, like I didn't believe in me or us probably at that moment as much as they did. But those are the moments where, you know, my dad is a Midwestern dude, not a big, you know, was very confused and kind of concerned by me saying, I'm going to start my own deal. Like, is it really that bad? You know, like getting a paycheck, living the American dream? Because he was a total kind of bootstrappy, or well, yeah, I'll say self-made guy, like put himself through college so that he could be rewarded with a stable career. Yeah. And so he's like, so you don't want the
dream of a pension.
Yeah, totally. And, you know, so he kind of said like, okay, well, maybe new clients come in, but if they don't, and, you know, I kind of joked with my dad because I love history. I was like, what did George Washington say to his troops at Valley Forge about attacking a bunch of hungover Germans on Christmas morning? Like, we're about to go bayonet some dudes on Christmas morning. I don't feel great about it either, you know, but the alternative is we're British subjects and probably prone to some nasty treason charges. So we've kind of got to put all the other stuff out of our head. And I remember saying to my dad, I was like, kind of feel like we're at that moment right now where like 6 months from now, I don't really know what things are going to look like after COVID, but we've got great clients. It sounds like clients are more interested rather than less. And, you know, 12 months later, you know, I kind of joked with my dad. It was, you know, 1 year later. And I was like, I think things are, you know, way better than I would have ever guessed they would have been because I was in a pessimistic place like everybody was. And life ends up beating those kind of pessimistic, you know, negative expectations. And so it's been kind of a great firsthand experience, although my wife and I have both kind of gained gray hairs together as I've put us through the entrepreneurial ringer. But, you know, at the end of the day, you know, I wouldn't change it because it does kind of scratch all those itches that you develop from being like, all right, I'm a good research guy, but would anyone listen to me if I didn't have the TPH card? Would anybody listen to me if I didn't have the Boone
Dan
Pickens
wasn't
card?
sitting in the meeting with me.
Yeah,
or
exactly.
Boone's not sitting there.
It's like, oh, last minute I did a speaking gig in Houston where, I like Dan sent me the email on a Tuesday and it was like a Wednesday speaking gig. And he was like, hey, you've got great macro slides. I'm going to ask you to go present to, this real estate company. And, there will be like some big Houston hitters there. And when I walked into that room, like you saw the CEO of the real estate, like this national real estate firm, like take out his BlackBerry and probably like write 4-letter words to Pickering. Like, you sent me some 28-year-old scrub from your team. And then it ended up going really great. And, I had a really good relationship with those folks. But to your point, like Pickering totally Indiana Jones'd me where he was like, I've got the Pickering idol and the Brad bag of sand.
No, that's awesome. Sitting here at kind of 53 and looking back at all the stuff, these are all just cliches. One of my favorite jokes is investment banking, just the art of stating the obvious with an air of discovery. But, at the expense of doing that is, one, you look back and you regret the things you didn't try. You never regret, man, I did that and I screwed up. You don't ever regret that.
Yeah.
And I can tell you this, there is nothing better on this planet than not having to answer to anyone except your wife, your kids, your partner,
Yeah.
I mean, the freedom that comes with that and the mental health. I mean, I have figured out I like the toys. I don't need the toys. I mean, the mental health aspect of being able to sit here and do whatever podcast I want, talk to whoever I want. If Colin gripes about it, I just put in my earpods. It's like, whatever, Colin. And so
it's totally true. I mean, look, there was definitely a phase where, my wife kind of looked at me and said, like, if we make it out of this thing alive, you can go a few years without scratching any itches. Okay. It's like I was pregnant with twins and you said, I want to be an entrepreneur and I'll be able to help with bath time just as much as I would otherwise. I might even travel less, but like you said, you never want to look back and say, I don't know, I don't know what could have been, or man, that was a nice stable deal. But I think, scratching that itch has been a lot of fun. And obviously it allows me to, come on cool podcasts like this and talk about life and all the stuff we've covered. But, I think discovering something new, to your point, right? I had that bonus at TPH where, I went and bought like a used Porsche Cayman, and which is like not even that cool. But, I got it and I was like, don't get me wrong, like darting around on 59 is fun. But I kind of looked at Bryn, and this was as I, was kind of winding up my time at TPH. I was like, I can't find enough of these that will last me more than like a month of endorphins to kind of want to just keep doing the big investment bank that pays well, and that sounds really like my dad would hear that. And he was just like, who did I, like so spoiled, such a spoiled mentality, which I get. But there's also a part of me that's like you said, I have missed very few bath times for the last 4 or 5 years. Like my knees can attest to that. And those are the things where, maybe the final, obviously I could tell stories all day, but the final story I'll offer is, when things were really kind of negative and it was so early and nobody was taking meetings with us, our fund had like 15 million bucks in it, maybe. And, I was talking to my daughter and, she's really kind of a typical oldest child, grasps really quickly. And, I was like, and she's like, what's stressing you out, Daddy? I was like, work, it's hard to find people to invest in the fund. And she was like, well, first of all, you just need to tell them not to worry. And I was like, okay. I was like, I want to hear some more kid advice. And I was like, well, honey, if we ever get to 100 million bucks in this fund, I'm going to take you to Disney World. And she was like, that is so exciting. How much is in the fund today? And I said, 15. And she goes, that's not very close. And, on one hand, it was a stressful time, but looking back, it's like, my kids got an up close and personal view of that. And, when I was on the TPH podcast, one of my daughters kind of said, she was like, well, Daddy, you're not on big TV yet, but you are on phone TV. And I was like, like my kids get to experience all the madness, which is cool.
Yeah, no, it's great. 'Cause at the end of the day, I think what you'll figure out, what you'll see from it is getting to watch them figure out what their passion is everything. I mean, you think when you have a kid that's born, oh, I want, this child to go to Harvard or do whatever. No, who gives a crap about that? Having them discover something they love and be passionate about it and, work really hard at it. And kudos to you. You've set the environment for your kids to go chase that in life. They saw daddy do it. And that's really cool.
I hope so.
My kids see me sit around on the couch and eat bonbons.
Oh,
So. Brad Olsen, thanks for coming on, dude.
Yeah, thanks for having me, Chuck. This was great.
Yeah, it's about time we finally met. This has been really cool.